Hey, what's up? I'm Russ. We've got a date. We've got an AT&T spinning off Warner Brothers Discovery date, which looks like it's going to be April 4th, and the record date will be April 5th. Now, we also have a dividend cut that they officially announced. The board declared it. They are going to be lowering that dividend 47% to 0.2775 cents per share per quarter, or $1.11 per year. So this was to be expected. We knew that they were going to be lowering the dividend. Yeah, it's technically a cut, but I like to think of it as a right sizing of the dividend. Now, we did a video on that and why that yield should be over 6% or right about thereof. In the end of the video, make sure you look at the little box next to my head and you can click the video and check that out there. Now on to the details of this spinoff. AT&T shareholders will receive on a tax-free basis an estimated 0.24 shares of stock in Warner Brothers Discovery for every share of AT&T common stock. So if you are an AT&T shareholder, you don't need to do anything else in order to receive those shares of Warner Brothers Discovery. Very simple math. For every 100 shares of AT&T, you will receive 24 shares of Warner Brothers Discovery. Now, this will be finalized. This is expected, but it will be finalized and made known immediately before the closing, and that will be based on the number of shares outstanding of AT&T and Warner Brothers Discovery. You also will have the exact same number of AT&T shares as you did before the spinoff, but it's going to be price adjusted down for the loss of Warner Brothers out of the company. And again, check out the video at the end. We'll go over it a little bit more in detail. Now, two-way trading will begin on April 4th and continuing through the close of trading on the business day before the closing date of the merger. There will be two markets in AT&T common stock on the New York Stock Exchange, a regular way market and an X distribution market. So you really have four options here. Really three options that you can take action on, but one of them, the first option, is to do nothing at all, and you will have the exact same number of AT&T shares plus those shares, a commensurate amount of Warner Brothers Discovery. And for anything that would be a fractional share, so if you were to have 24.5 shares, you're going to likely receive, as is traditional, cash for that half a share. The second way is regular trading. If you sell your ticker T, AT&T common stock, you will be selling both the AT&T common stock and the right to receive the Warner Brothers Discovery common stock. Very simple. With ticker T, if you sell that one, you will sell your AT&T shares and you will also forfeit the right to receive the Warner Brothers Discovery shares after the spinoff. Third is the X distribution window, where a temporary New York Stock Exchange symbol T.WI will be available to trade, and shareholders can sell their share of AT&T, but they will retain the right to receive shares of Warner Brothers Discovery. This is what you would utilize if you don't want shares of AT&T after the distribution. You only want those shares of Warner Brothers Discovery, and this is how you can do that. And fourth is WBDWV trading, where shareholders can sell the right to receive shares of Warner Brothers Discovery common stock, but keep their shares of AT&T, and this will be available under the temporary option WBDWV. And that's pretty straightforward. So if you want to sell the right to the Warner Brothers Discovery shares, you can do that while also wanting to hang on to AT&T. This is the option that you would choose. And do note, though, that trades under the symbols TWI and WBDWV will settle after the closing date of the Warner Media Discovery transaction. So if the transaction, which means the spinoff, is not completed, all trades made under these temporary symbols will be canceled. So basically, if you made any trades during this temporary trading window and you utilized one of these two latter options and the transaction didn't go through, they wouldn't go through either and they would be canceled. And the note, two-way trading will continue through the closing date if the merger closes after the close of trading in AT&T common stock on the New York Stock Exchange and trading in Discovery common stock on the NASDAQ Global Select Marketplace on the closing date. So if the merger closes after the close of the AT&T trading day, then from what I read there, the trading is going to go until the market closes on that second date. As for me, if you want to know what I'm doing, I've made my thoughts well known. I'm going to be holding on to some of my Warner Brothers Discovery shares. I like to be a little bit more risky, so I'm going to give it a couple weeks for the Warner Brothers shares to see if there's any kind of buying frenzy. Yeah, it's risky because people could just sell and start dumping, but I think that a lot of people might be thinking this is the next Netflix, or this is what's going to compete with Disney and Hulu and all the other streaming kings out there. But I'm not so certain that they're going to be to that level. So I'm going to wait and see if there's a little bit of buying pushes it up, and then I'll sell for more profit. And I'm just going to roll that right back into more AT&T and just hang on to a few as mementos of this time that we went through together. So let me know what you're gonna, let us know what you're gonna do with your shares of AT&T and or Warner Brothers Discovery. And look at this little box next to my head. We did a video where you can see me talk all about AT&T. Gonna have that 6% likely yield after the spinoff here in a few weeks. Check that out, and I will talk to you there.